Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 8th of March. So over the weekend, again, we've heard more positive news from the US stimulus package. The next decision point on that is now Tuesday of this week, but as the progress is continuing, it's unlikely to hit too many hurdles along the way now. We've also had an attack on a Saudi oil installation over the weekend, and that's created quite a bit of volatility in the price of oil. So oil spiked up to about sort of $70 in early trade this week. It's now sort of slightly off that, but again, the commodities across the board are sort of being slightly impacted on the strength of the dollar, and I think that's going to be the big question at the beginning of this week for traders. Over the past sort of couple of weeks or so, we've had quite a theme develop in the markets with strong dollar as a safe haven play, stock rotations particularly impacting on the Nasdaq, and the strong dollar again impacting on commodities across the board. So that's the theme that's been developing. Let's see if it's going to continue. So before we take a look at the markets, just want to remind you of the live trading session that we're running on Wednesday this week. It's at 9 AM UK time. You're welcome to join. The link to the session is below the video here. Now, we'll be taking a look at a number of different markets, not only the markets that we're discussing today, but also many other sort of potential opportunities that we're keeping an eye on going into the second half of the week. So let's take a look at the markets here. So from a commodity perspective, silver is looking quite interesting to us. So gold is particularly weak. It's much weaker than the price of silver, and silver has very much been the lagger here of the two. But now silver is starting to play a little bit of catch up, and it's sort of broken down towards this sort of level just north of that $25 price point. You can see that we've got quite a sort of decent trading window down to around that sort of $24 level as well. So we're starting to develop a short trend here on the daily time frame. A break underneath this level does really sort of open up the market to move short. And again, if we have a look at this on the 4-hour time frame, we can see that just above $25 we've got certainly a good sort of significant sort of level there. So that's a nice sort of decision point area. Underneath this area does sort of break past all the previous resistance we have in this market, and that could indicate a bit of a freer move to the short side there down towards that $24 price point. If we come and have a look at the index markets, well, the index markets again have been quite choppy over the sort of past trading week. If we have a look at the Dow here, which is our sort of favorite out of the three, and that's the Nasdaq and the S&Ps, of course. So taking a look at the Dow here, you can see that the market has rallied up to, we had a strong move on Friday, it rallied up to 31,600, and now we're sort of seeing some weakness after that. In fact, all the index markets are weaker this morning. The big question is, what's going to happen here? Are we going to see these continuing to sort of falter? I think that the Dow clearly the lagger here behind the other markets, and that's because it's its composition is more the industrial markets, which are sort of being seeing a bit of a benefit as stock rotations take place. I think coming forward here, we've got this stimulus package, which is likely to come to fruition sort of fairly soon, and that does give rocket fuel, I have to say, for these markets, for stock markets. So out of the three, I think the Dow is possibly sort of set to sort of benefit from that a little bit further than the tech-heavy Nasdaq. So the level here that we have, and you can see that we've got a very, very clear decision point here at 31,600. This has been a level that price action has developed for quite some time. The fact that we've now managed to get through it and now we're sort of pulling back to some sort of area of equilibrium is not so surprising just from a technical structure. I think if we get above 31,600, then look for 32,000, which is the previous high, and then above that, well, of course, we're into free space there, and there's no structure at all into new highs. So I think the path of least resistance could be to the long side, particularly if we continue to see positive news on that stimulus front. Now, if we come over to the dollar market, now the dollars have been, US dollar has been continuing to appreciate as money's been moving into that currency, very much as a safe haven play. So I think some of the nicer moves might be in some of these dollar related markets. So markets like the euro, for example, if that dollar continues, it's going to put a lot of pressure on the euro to continue its weak move to the short side. And the euro here has been weak ever since it's sort of broken through that significant level of 120. So the market today has actually now broken through 119. We've got a next trading window down here towards 118, and then below that down to sort of around that 117 price point. And there doesn't look to be an awful lot in the way resisting the market for that 118 price point. So again, coming down to the lower time frames, we have a look at this on the 4-hour time frame. You can see that around 119 we had some significant support here. The market's taken that out now, so any kind of retracement could be areas for resistance and could be areas for looking at shorting opportunities. Particularly, I mean, even if we got retracements back up into 119, that could be sort of certainly areas where we'll certainly start to look for weakness and potential sort of setups to the short side. So there's a few markets there that we're keeping a close eye on at the beginning of this week. I certainly hope it helps and look forward to speaking to you on Wednesday. Bye for now.